Thanks for coming tonight. Thanks very much for the Parami Institute for having me. I'm going to hopefully make this an inclusive discussion rather than me speaking at you. I do hope that we can speak together. I know there's a lot of expertise in this room. I imagine you're here tonight because you're either hoping this might happen, or you're involved in the financial system and the financial universe of Myanmar, be it for a bank, or for an MFI, or maybe you are just a consumer of financial services. In any respect, I think you all have an experience that we can all learn from. So I have a few questions first. I'm going to do a little poll here. So how many of you here work for a bank or work in a bank? Hands up, come on. It's okay, it's all right, it's all right. Everyone, be nice to them. It's not their fault. How many of you here work in a financial institution of any description? MFI, having to do with money, right? Okay, that's great. So how many of you here are surprised that I'm not wearing a suit? Because most bankers wear suits. Right? We wear suits, we look powerful, ties, jackets, right? The whole thing. And I think this sort of explains a lot about some of the challenges to making financial institutions and financial systems more open. And I would argue that this challenge is not simply or unique to Myanmar, right? This is a global phenomenon. It's not like suits. In fact, there are very few suits perhaps in this country, but certainly in other markets, you do see, bankers dressed this way, and it is really about power, right? It's really about the ethos that banks have had over many years, and I would argue that's something that goes along with money. So, one of the first questions I wanted to frame is, why bother making a more inclusive financial system? What's the point? Why does it matter? Does anybody here have any thoughts or ideas on why an inclusive financial system is important to a country or to its people? Is it simply something we should do? We feel that's the right thing. It's something NGOs should do. It's something we should all do. Why do you think it matters? Anyone here have any good ideas? Go ahead.
For sustainable economic growth, so no one gets left out. There's not a big gap between the rich and the poor.
Yeah, social reasons, absolutely, right? So we can have a smaller gap, or ideally no gap, or a more inclusive financial system to bring people together. Yeah. So there are a lot of different reasons. Some of them are social. Some of them are, in fact, in the best interest of the financial institutions themselves. If much of the population is not involved in the financial system, it becomes irrelevant. And in truth, you've seen that in this country over the past many years. More recently, you do see a larger financial system, but it is still relatively small in the context of the country's GDP. So that leads me to my next question. How many of you here have a bank account? Right? You don't need to tell me how much is in it, just tell me how. Do you have a bank account? Hands up, please. I just want to get a sense, right? All right, so you have a bank account. How many of you here have been interested or have credit from a bank, been able to borrow from a bank? Okay, hands up. But far fewer, right? And that ratio is an interesting one. That ratio is an interesting one, particularly in the context of a country in which credit is quite needed. And in truth, this distills part of the issue, right? Now, I remember asking my colleague at Yoma Bank, and we were talking about something, and she said, I asked, does your mother have a bank account? And she said no. And I said, well, does she have any savings? And she said yes. And then I asked, well, what does she do with her savings? She says she lends them. I thought that was interesting, and I said, to who? And she said, well, the lady down the street. And in truth, what has happened in this country over time is that a parallel financial system has developed And it's often labeled as a gray market, at worst a black market. It is seen as very much something of a bad thing, right? Now, in truth, I think it's born out of necessity rather than anything. And it's born out of a need for people both to deposit their money and get a higher rate of return that perhaps banks can offer. It also, for those that need to borrow and simply can't meet the terms and conditions that banks require. So that's what we're going to talk a little bit about tonight. We're going to talk a little bit about why having a more inclusive system is important. And we're also going to try to dig into a little bit about how we got here. How did this country get here? Right? And how did many other countries get to a situation that they're in? But also we're going to talk a little bit about some solutions that may come. I know the slides may not be that visible. It's fine. The answers aren't on the slides, right? They're just some ideas. So in fact, I don't have the answers myself. So what we're going to do is talk about this and see how to take it forward. So whose job is it to make a more inclusive financial system? Is it mine? Right? I run a bank. Is it the regulators? Is it the governments? Is it whose job do we think it is? I would posit that it's really all of our jobs. Right? It's important to all of us. Regardless if you're just a consumer of financial services, or perhaps you run a bank like myself, or you're a regulator, it's something that we all need to do together. But there are features of this economy which I believe come from history, and many of you as Myanmar will know this better than I, that effectively have meant that the system has not been set up to be inclusive. And it's not really thought about that way. In fact, it seems to be somewhat almost haphazard that it grows to become more inclusive over time. And there are a number of features to this. It seems that state-owned banks have been set up to serve, quote-unquote, the people. And you see this again and again, be it for agricultural purposes, right? Be it for SMEs, be it for housing. You see a plethora of state-owned banks that are set up, founded, management teams put in, funding provided, and then they go off to set up a social purpose. In my mind, that's a reflection of perhaps weaknesses in the private financial system. Right? In other words, private banks should really be filling a lot of those needs. Private banks are owned in this country largely by single founders, right? Families. They're run better or worse depending on the bank, right? Depending, on the professionalism of the team, and that's not something we're going to talk about tonight, but we're really going to talk more about the system as a whole. But if you look at the way the banks are structured, the truth is that what happens in this country is that banks borrow from the poor and they lend to the rich. Right? Some of you may have heard me say that before, because in truth, the way the regulatory structure has been created prohibits many people from borrowing. I was quite interested in how many people put your hand up. I'm quite impressed, right? How many people have been able to access credit from banks? And that's because you need collateral in order to borrow. But what's the read-through to that? So the rationale is risk. We need collateral because we need to de-risk a transaction. But the inference is that you need money to borrow money. How can you have collateral without money? So you need money to have collateral, and then, And ironically, you end up in a situation with capped interest rates where those people with collateral, in fact, borrow at a subsidized rate. Because I think many of you know that as someone without collateral, if you try to borrow in the market, you're borrowing at conservatively 2-3 times the bank rate. Conservatively, right? And typically, for those people that really need credit, supply and demand, you're borrowing at multiples of that. So, those consumers, or those Myanmar citizens that have liquidity, chat liquidity, the purpose, what do they do with that? What do they do with that excess? They can put it in a bank account, right? Anybody know what the interest rates are in this country? As you all do, because they haven't changed much, right? At least in the 5 years I've been here, they haven't changed, right? So anywhere between 8 and 10%. Does anybody else know what the inflation rate is in this country? I'm going to use this time to take off my jacket as you kind of tell me what the rate is. Inflation. Anybody? Take a ride. Huh? 9, 10, good, yeah, okay. So it's sort of north of 12%. Right? So over time, and you can see that in the foreign exchange rate with the dollar. Right? So fair enough, the dollar moves, it's a pair, dollar and chat, so dollar strengthening, chat weakening, or vice versa. But in truth, I arrived here in late 2012. The chat was at 800 and change to the dollar. It's now at, well, we all know that, 13.65, right? So it's moved over time at that rate. So ultimately, when you put your money on deposit with the bank with the rate capped at 8 to 10%, you're not earning the rate of inflation. Doesn't make any sense, right? It doesn't really make any sense to be putting your money in, but in truth, people don't have alternatives. What are your choices, right? You can either lend it to your cousin down the street, somebody you know, but you could lose it, right? Or you can put it in a bank and not even get the rate of inflation, which is a problem. Now, on the credit side of the equation, if you look at a risk-based measure of what the cost of credit should be in this country, it is, shall we say, far higher than the 13% that you see here. And I mean, we can get into the math, but ultimately, if you look at inflation, the country risk, and then a business risk, typically, you see deals in chat have a hard time getting done with foreign lenders, primarily because the regulator has a veto on the cost of debt that comes into the country. They simply won't approve credit above a certain number. So all of this flows through the central bank. So you've got a situation where credit is artificially cheap for those that can provide the necessary collateral. For those that have liquidity, they don't really have many alternatives. So we've got a nascent stock market. That's great. It's growing gradually. There are no debt capital markets here. So for corporates to issue debt and to be able to offer those Myanmar who have some excess cash, that doesn't exist. So you couldn't have a City Mart or any other large commercial vehicle put out their own corporate credit to access. So the regulatory environment doesn't seem, despite the talk of financial inclusion and the need to get there, there seems to be a fixation on the cost of credit rather than the access to credit. And I would argue that that's the primary issue here, is that we need to give people access to credit. There's no point if credit's cheap, you can't get it. It could be free. If you can't get it, there's really no point. And in truth, that's the regulatory structure that has been set up, and I think it's one of the things we need to solve. We've talked a little bit about banks and their purpose. In truth, one of the read-throughs from one of my earlier comments I think is important. Banks themselves, people say banks have the money, right? They have lots of money. In truth, banks don't have any money. Banks have no money. It's your money. They have your money. They have the people's money. It's not their money. It's not their money. And I think it's something that I try to remind my colleagues at Yoma Bank, that it's not our money. It sits on our balance sheet. We hold it in trust. It's a fiduciary duty to make sure it gets returned, but it's not our money. And I think often you will see that perhaps some players in the marketplace have forgotten that. They've forgotten that it's not their money. Right? It's someone else's money. And that ultimately, those people will want it back. So I think as we look at the behavior of banks, either private or state-owned, there needs to be a behavioral change to make those banks more accountable and more responsible to their stakeholders, be those borrowers or lenders. Right? They have stakeholders. They have those that put their deposits in trust with the bank. They have the people that borrow that money. They have a regulator. And then they have all the other people that perhaps don't bank with that particular bank, but are stakeholders in the sense that they are here in the country. We've got a lot of what they call non-banking financial institutions, right? Those MFIs and others, many of you work with them, and they do some really great work. The issue is that to a large extent, they're limited in their ability to raise liabilities. Their licenses, the way the licenses have been structured in some unique logic, shall we say, prohibits them from raising those deposits. which I find confusing. I can't quite understand why this community has not been enabled to grow. And in fact, I'm quite pleased that Yoma Bank has been able to step in and provide some wholesale funding to some of those MFIs and those MBFIs to allow them to lend. And in truth, these MFIs have proven the logic that it's not the cost of credit, it's the access. They have people lining up at their doors to borrow at 30%. As you know, MFIs can lend at 30, banks are capped at 13. And I think it's quite interesting because the narrative and the discussion that happens in the press is that 13% is too high. It's too high, it's the cost of credit. And there's a lobby group that's constantly pushing for that. Ironically, that's a very small community that can even has the luxury of complaining about rates because no one else can even access credit. And if you are accessing it, you're accessing it far north of that number. Right? You're offering, either you've managed to get an MFI, if you're lucky, you're at 30%, but chances are you're at multiples of that because you've had to borrow from someone else in the informal market. And I would argue that that's typically the case. So it's a rather a discussion going on in a vacuum. Right? And I find it interesting that that's the narrative in the press, and I find it somewhat disappointing that there is no one speaking for the people, if you like, to step in and say, look, if you look at the average cost of debt across this country, it is 40, 50%. Look at the average cost of credit. Don't look at what banks are lending at the headline rate. Right? Look at the actual cost of credit if you as a small business. Right? What if you have to do this? And I find that this is something that really needs to be talked about openly. It's one of the reasons I'm here tonight. Right? So that people can understand it. Right? It's not something we should run from. It's something that we should talk about. How do we solve it? How do we get there? NGOs, I think, have a social mandate we talked about earlier, about bridging the gap, about giving people more access to credit. I think that's a worthy goal. In truth, perhaps I'm revealing my Anglo-Saxon DNA. You know, I think for these things to scale, they have to be commercial. I think NGOs and others provide a great seeding ground to get this started, and you've seen other countries where things that started as NGOs like MFIs, and they really grew to become commercial and made a massive impact. But these things have to be sustainable, meaning they have to be commercial, they have to keep the lights turned on, you know, you have to have some way to turn it, keep it turned over. But I think NGOs play a very, very important role. So, as I mentioned before, banks and their role. What's the role of a bank? And in truth, banks have, in my mind, a very important social purpose, which is often not being fulfilled, particularly in this country. Banks, as you know, are universal. They're in every single country you can think of. Every country has a bank, whether good or bad. They provide a very important purpose. They take the excess savings of those that have, and they're a transmission mechanism to those that need credit. And it's a pass-through. In many ways, they're a utility. Banks, in many ways, are a utility, right? And they should effectively provide that transmission mechanism from savers to borrowers. In this country, that balance is broken. It's simply not there. I spend a lot of time arguing with the US State Department about the informal market, which they've labeled as, you know, a threat, money laundering, you know, whatever you want to call it. And I would argue, if you look at those numbers, typically it's good people, simply have no access to credit in any other way. They're not doing anything wrong. They're trying to sell noodles, they're trying to build a hotel, they're trying to do something, whatever it is, but they can't meet the terms and conditions of a bank, right? Again, we're set by the regulator. So in my mind, the balance between savers and borrowers is not being met. Risk versus return. It's something that is equally broken in this matrix. Banks here earn a 13% cap, which in truth leads them to take no risk. If inflation's running at 12, right? Even if it's running at 10, let's be generous. Your margin, after you take out the cost of operations, is extremely thin. What does that mean? That means I'm not taking any risk. Zero. I can afford no losses. I can't take any risk. You don't have the ability to fund your business, right, with a cap rate. So again, you end up in a situation where lenders are not really taking the necessary risk to support the economy. You have a situation where the transmission mechanism is broken because of cap rates. Banks don't take any risk. 50% collateral, right? You need to have money, but having money is not, even that's not good enough that you have collateral. I'm then going to discount it by 50%. And if I don't like the way you look, I'll discount it 70%. Right? So it fundamentally doesn't work. It's a false positive that having collateral somehow helps. So what are banks good at? Depends on the bank. But in principle, banks are good at safeguarding cash, right? They're good at taking it, they're good at counting it, something banks are very good at doing, right? Go to any bank in this country, wow, they'll count all of your money 3 times, right? Put it back out again, count it, recount it, put it back in the vault, count it again, out it goes, in it goes. Lots of money counting, right? So that's what a lot of banks, what's their purpose, right? They're also good at providing very cheap funding to a small group of people, right, that have the collateral. That's excellent. Notice all the real estate, right, going up. Those people are using that cheap debt to finance, right, their projects. Unfortunately, they're not as imaginative as we would all want them to be, and they keep building buildings, right, rather than starting the next, I don't know, Google, right? But ultimately, this debt is one of the only sources of finance, right, for business in this country, and there's a select few that can access it. So banks are very good at doing that. Banks are bad at, and I think you can all help to fill in the blocks here. Now, you know, it's funny for me to stand up here as a banker and say these things. I have to say that I'm proud to work in this financial system, right? I really am. And my goal here tonight is not to lay the blame at the feet of bankers, nor is it to lay the blame at the feet of any one constituency in particular. But there has to be an open discussion about it. There has to be a conversation about where the system is broken and how we can move forward. So, I'm not going to get into all the details, it might be too depressing for me if we get into the... So, in my mind, you've got a few key ingredients that give me pause and help us think about the necessary inputs to having a more inclusive system here in Myanmar. One is, again, focus on the access to credit. Allow for real competition between lenders and borrowers. If you've got a great business, you should have banks falling over themselves to lend you that money, right, at the right rate. Allow a competitive state. You've seen this in other markets, right, where ultimately the market clears because you're allowing banks to compete over good borrowers. Allow banks to make decisions and be accountable for their own performance. So I think that there should be more of a focus on access to credit rather than the cost of credit. You'll notice that most SME initiatives in this country, one of the key things that comes out of that, any article you read, is the cost of credit. Every single article on SMEs, oh yes, we're going to finance SMEs at 7%, 6%, 8%, 10%. It doesn't really matter, right? But none of those programs are sustainable. They could often distribute tens of millions of dollars to SMEs, but the process through which that credit is distributed is not transparent and ultimately doesn't really make a dent to the wider community. If you happen to know the guy running the program, happy days. You can access credit 7, 8%. But for the other 54 million Burmese, it's not getting the job done. And you see it year after year. And it's not just SMEs, it's agriculture, it's whatever particular constituency you're thinking about, housing. You have to solve the systemic problem. You have to address the entire piece, not just one element. And in my mind, it should not just be cosmetic. We can make it look pretty, we can do little bits around the edges. But until somebody has the courage to step in and say, look, this is really a problem. We've got an issue from the top to the bottom. And it's got to start somewhere to resolve some of these issues in the market, which brings us to regulation. We can't get anywhere until we look at the nature of the regulation and the goals. There has to be an acknowledgement that the regulators in this country, be it in the financial services sector or in any other sector, are accountable for the entire economy. All the people in Myanmar. Not just the people in the formal financial system. So when you say the cost of debt in Myanmar is 13, that is simply untrue. If you look at the real cost of credit in this country, it's between 40 and 50%. It's that issue that needs to be solved, not the issue of the 13% for those that have collateral. So I think from a regulatory perspective, we actually need to walk the walk about financial inclusion rather than just talking about it and saying this would be a wonderful idea if we had it. So a lot of it really starts in that respect. If you don't have a progressive regulatory environment, it's going to be very, very difficult for players within the system to operate. MFIs here have been choked for years because they can't access liabilities. We've talked about that. They often try to borrow from overseas. They haven't been able to. They haven't been given the ability to really access debt overseas to fund their business. Part of the issue, again, is because the interest rates don't compensate those lenders for risk. Ultimately, those foreign lenders need a higher rate of return to justify lending and providing liquidity into the country. So you've got a real dislocation in the credit markets in this country, really around rates and access to credit. Technology. This is, in my mind, really a blessing for Myanmar. And I think the storyline has been told and retold many times, and I won't get too much into detail. And I know there are many that are disappointed that technology hasn't had a bigger impact in the financial services sector, right? Everybody's got an app, right? We've got an app, it's great. Right? You can access, you can look at your bank account. But really, what is the next step for technology in enabling financial services and making them more inclusive in this country? I can assure you, it will happen, and it is happening. You will find that in the next 5 years, you will simply see that many Myanmar will have more access to finance, more access to digital credit, right, than we've ever seen. And the simple math that is happening here is the operating cost of providing small amounts of credit is crashing. Because today, building a branch, let's just say it's expensive, right? To probably ballpark $500,000 per branch. That means you simply can't justify lending out 15,000 check, 20,000 check, 50, 100. Look, in truth, you probably got a floor of around 40 to 50 million. Go to a bank today and try to borrow 20 million check. They'll look confused. They'll ask you what your collateral is, right? And then after that, you probably won't get far. The only market in which consumer credit is slightly happening is in the hire purchase market. You can get borrowing for a motorcycle or maybe a car because it's secure. But where technology will solve the problem is lowering the transaction costs to lending. It will also lower the transaction cost to deposits. You will be able to deposit money at one of thousands of touch points across the country and borrow digital credit on the phone. And I truly believe that will happen. And I think Myanmar is uniquely positioned to benefit from this. In many ways, I think Myanmar, despite some challenges, really has a last mover advantage in this respect. There really is no legacy. There are many people in this country, the first time they ever picked up a phone, it was a smartphone. Now, it may have been a 20, 25,000, 30,000 check phone, right, of a brand that I can't name from China. Regardless, it works. And I can tell you, it's got more firepower than the Nokia phone I had back in whatever that would be, 98, the USSD phone. And it really is incredible of that processing power that are in those phones. And there aren't many, many people thinking about these challenges on how to get this solved. Now, I have to be very transparent. It is not about an advertising campaign calling it, your digital bank, right? And then you can access that, those are nice optics, but in truth, it really is about offering access to financial services to the mass market, which requires a change in mindset. There is not one of these that will solve it. You have to address all of these. So you can have the best technology in the world in this country. If the mindset doesn't change, if the regulatory environment doesn't change, it won't mean squat. It doesn't mean anything. You can have a wonderful channel, which we sort of have, but unless you change the regulatory environment, right, and the mindset around the access to credit, none of this will work. So you need all of these to work together. You cannot just have one. But the ingredients, very much like a soup, have to come together. And that's what will make it work. It sounds intimidating, it sounds challenging, and it is. It's all of those things. But at the same time, I think the need is so great in this country. The need is so great. It's not like banking is okay. You know, I'm from Canada, right? Banking in Canada, is it something that I would rave about? No. Right? Do I love banking in Canada? No. We have 5, 6 banks. You know, they've been running the same way for 40 years. They sort of do the job, right? But it's okay. Right? It kind of works. In this country, banking just doesn't work. Right? It doesn't work. The urgency for change is significant. And the interesting thing is, everybody in this room, whether you like it or not, you are from the elite. Right? Just by virtue of being in here and being able to understand me suggests that you come from a certain opportunity in this country. If you think the banking sector doesn't work, imagine what all the other people think. Right? You have more access than many others in this country. So I think, in my mind, the ingredients that you see here, the opportunities with technology, and the simple dissatisfaction that most Myanmar have with what they are offered will lead to rapid change, in my mind. You've seen it with the telcos. You saw the entry of the telcos. That was done well or poorly, depending on what you look at, but the result is clear. Everyone in this country who really needs a phone can access a phone, right? And that, the 3G network, I mean, gosh, you've got better connectivity here than we have in most parts of the world. So the potential is there. If there's a switch in mindset, I think you really will see a lot more opportunity. So, we've talked about a lot of things, and I mentioned others. I'm going to close with summary of some of the things we've discussed. Rates, I won't touch rates. Inflation, we've talked about inflation. Lending regulation, we've talked about that, collateral. Currency, we've talked about that. You know, many Myanmar, there's a small group of Myanmar that can move out of the currency. What do they hold? The dollar. Oh, the US dollar. They hold US dollars. And if they have enough of them, what do? They buy assets. Right? But it's a small group. And what are they doing? They're voting with their feet. They're confirming everything I've said here tonight. It's just not written down. They're doing it behaviorally. They know it. It's instinctive, right? You see the currency move a certain way. You buy hard currency, right? You move out of the currency. Now, it's been stable for the last 6 months, but it has not been historically. So I think the stability of the currency is a very important feature for the country to encourage FDI, right? And to get people to hold their own national currency. Now, your previous governments did that through force, right? They told you 30 years in jail if I find you with a US dollar. I'll never forget, 2 years I was here, 2 years, and there was a problem with the foreign exchange rates. It was classic. And you know, the chat was moving. Suddenly a rumor went around. I said, what's going on? They said they were arresting all the money changers. My God, what does that mean? What does that really mean? You know, it's like trying to, you know, they literally saw the move of the currency. It's the fault of the money changer. There's a misreading of the things of cause and effect. There has to be a better understanding. If you print billions and trillions of chat, the value of the currency will go down. There's just supply and demand. There's just too much of it. That has to be talked about. It has to be talked about. It has to be acknowledged. I know everybody feels very awkward. Ooh, very sensitive subject. And maybe 10 years ago, this meeting would never be happening. It's true. But for it to be relevant, we have to touch on the subject. It's not about blame. It's not about finger pointing and saying it's your fault, it's my fault. It's about solving the issue, addressing it, and moving forward. Because unless we resolve it, we won't have a better life for the people in this country. Cash. Oh, cash. Ah, we love it, right? Bags. Bags, right? Man bags, little bags, women have purses. But for us guys, it's hard work, right? Like, where do we put it? Where does the money go? Right, so now they're cards, but we all carry on little bags, like fanny packs, with the cash in it, right? And that's a reflection of the lack of ability to transact digitally. So POS is coming, and that's great. But in truth, the fact that the largest note that's printed in this country is 10,000 chat, that's problematic. You could solve a lot of the transmission problems, and forget technology, by printing 100,000 chat note. True. I mean, 50,000, heck, let's negotiate, right? We'll go. And maybe 20. Right? Let's start somewhere and just print a larger note. That is not complicated. Print a larger note. It solves the transmission mechanism, the problem that we all have as inflation bites. You're stacking up more and more notes. And it's simply a state of denial to suggest that it's not happening. You just won't give people access to larger notes so they won't pay more. Again, it's like, oh, I don't have the money. Okay, well then I'll reduce the price. It's wrong-headed, right? So printing a larger note would solve the cash problem. It would also help banks like mine put my people to better use than counting it all the time. I can assure you, most people that count cash in this country would rather be doing something else, right? As a banker, I can tell you that, but all the SMEs, all the business people as well, right? There's probably a better use of your time, right? And those issues are getting solved, some of them through technology. MPU is a great idea. I think it needs to be executed a bit better. Nevertheless, it's a very important infrastructure. If we ever get interbank, that would be magic. That means we're not all squabbling over people to work in their own ecosystem. You know, you can have a bank account with KDZ and I can send you money back and forth, right? That would be great. But I think cash is one of the most significant limitations as well to the progress of the economy, not just banks. If you don't have access to physical notes, you cannot transact. Commerce doesn't exist. You go back to barter. You're going back 100 years. And in many of these villages, this is what's happening. There's so little physical cash available that people do away with it altogether. That is not supportive of the validity of the actual note. So cash is important. The legal environment, relevant to many industries that we all work in. Honestly, it underpins all aspects of society. If you don't have confidence that you have a supportive legal environment that will read the regulation, that will support you in your business, it's very difficult. Hence, the need for most businesses to pay all of their rent all in advance. That's expensive. That's a high price to pay. You want to rent a place for 3 years? Okay, I'll take your rent, 3 years rent in advance. You know, we've all done it. Many of you live in houses and apartments where you've paid in advance. That's because there's none of this. Right? The landlord, quite rightly, thinks to himself, geez, you know, if I get this renter in, they stop paying, they leave after 3 months, they squat, they don't leave, I've got no legal recourse to solving the problem, so I'm going to get all the rent up front. And that goes for banks as well. Again, another reason for me not to lend money to you. Right? Bad legal environment, no collateral, don't know where you are, right? So that's another issue that we have here in the country. So I've spoken for about, 15, 20 minutes, perhaps, maybe a bit longer. I want to close with just a few thoughts and ideas, and I'd very much like to hear from you. Many of you work in banks, foreign banks, I see some faces I know, local banks, other institutions, and I think it really is a discussion. I also think we need to have the courage to talk about where we're all falling down, right? Where it could be done better. I think this country deserves better, in truth. And I see this as one of the least politically sensitive areas in the country. There's lots of no-go areas, right? Land reform, land title, you know, we don't even talk about some of the issues going on in Rakhine these days. I'm just going to get nervous as I talk about that. But the reform of the financial system in this country benefits everyone. It really does. It is one of the least sensitive areas, right, across the industry. It is something that is technical. It is something that is not emotional. The stakeholders in the current system are very few, I can assure you. And those stakeholders would very much like to see change. So in many respects, I see the reform and making Myanmar more financially inclusive as low-hanging fruit. I truly believe it is low-hanging fruit in the context of this country. There are many other things that are much more difficult. A lot of it can be resolved with a few strokes of the pen. You can change these things relatively easily. And I think that's the opportunity that we have in front of us. And I think, again, if these conversations mushroom, people can talk about it, they have a better understanding of why the system doesn't work. I think everybody feels that the system doesn't work. They might not know why. They just know they're not happy, right? They think it could be better. And in truth, I've been able to share with you some of the reasons, or at least in my mind, why the system doesn't work. But I would encourage you to be brave, right? Not worry about it, but do something. Right? Particularly those of you that are here, that are Myanmar. Right? You can vote. That's a privilege that you haven't had for a long time. Right? But you can also talk about it. You can also talk about something that, in truth, is something that can be changed that really doesn't serve the interests of most of the people in this country. So at risk of repeating myself, I really do think this is something, and I'm glad that the Parami Institute has had the willingness to invite me here tonight. But I think it is something that we could all do to resolve these issues. I'm also very happy to take any questions, if that's the stage we're at.
Thank you, Thank you, Mr. Hal Bosher. Now, I would like to welcome questions from the audience. We have 20 minutes for the question and answer session.
I don't have any bank background or financial background, but when you say this supply and demand of money, like the value of money decrease if they print more, but however much they print, it doesn't get to the hand of people, and there is no supply increase because only those who have right on it will only have. And when you say that, how can I understand with compared to dollar? Because I think dollar has the most in quantity in the world, and it's still very stable compared to other currency. So can I have more understanding on that?
Yes. At risk of getting into an economics lesson, I'll try to stay away from too much detail, but you make the right points. Right? In truth, what we saw at the tail end of the last administration, so that was roughly 2 years ago, there was between 2 to 4 trillion chat printed. Right? So that enabled a lot of investment, if you like. But that increase in the money supply had a lot to do with the chat moving from where it is to where it is today. One of the good things this government has done to date is stabilize the currency. A lot of it is because they haven't printed. Right? Now, to your point, where that money goes hurts the people rather than benefits it. So the people that print the money, and it comes out of thin air, right? Money is then printed, it just comes out of thin air and you spend it. That first person that spends it, it certainly has value to them. But unfortunately, because of the oversupply of money, it creates inflation. Hence, the chat going from 1,000 to 1,100 to 1,300, 1,365 over the last little while, right? So, you're absolutely right. Despite the printing of all of this cash, it really hasn't helped the people that need it most. It's provided more currency for people to trade with, but the value of that currency has gone down. Which leads us to the US dollar. So the US dollar and the value of the US dollar and their, shall we say, post-World War II monopoly on world trade, which has been challenged at times by other countries, most recently by the Europeans and by the Chinese as we speak, right? Really is a function of politics as much as it is a function of economics. The global hegemony that the US has had over the last, since sort of the Cold War, right? The free world, really has led to the strength of the dollar. Right? The Fed, a lot of the transactions where the global commerce go through the US. It has the full faith and credit of the US government. That gives the US a huge advantage, which they really want to hold on to, right? As a country. A lot of it has to do more with politics than it has to do with economics. Because to your point, you could just as easily see as politics change, the Chinese RMB become a currency that people will hold and trade with. It could easily become the RMB over the next 100 years. In fact, there are many people that predict that. That's politics, that's not economics. It's politics impacting economics. So I'm not sure if I've answered your question on the strength of the US dollar, but in truth, it is a function of their political mass, their political weight, rather than any particular formula.
I have a question. I'm from a technical background. So my question is, do you see the fintech startup as a threat, like, or partners as a distribution channel? My second question is, do you see, how do we reduce the cost of capital to loan the money?
Yeah, great, really great questions. Globally, without the, where were we? Without the regulator, fintechs would be a lot more successful. In truth, the regulator creates a monopoly for the license holders. And by the way, that's not unique to Myanmar. That's a global phenomenon. And in many ways, banks hold their status primarily because their home regulator looks at a fintech and says, a bunch of 27-year-olds in jeans, really? Am I comfortable with that? Right? They'll get there. And I do think that it will happen. And once the regulator steps out of the way, I think you'll see a lot more penetration of tech startups in finance than you see today. In this particular country, do I see fintechs as a threat? Absolutely. And in truth, it's not the 27-year-old. It's Ant, it's Tencent, right? It's all the social platforms you all use, right? I mean, to the extent they are provided or enabled as a solution, right? They would be very, very successful in a country like this for all the reasons we've talked about tonight. The local environment's not doing the job. And in truth, difficult for me to say this, but in truth, if you were trying to serve the needs of the people, right, instantly, if you let WeChat and Ant in here, it's over. I can tell you right now. I mean, they would turn this country upside down. Now, is that in the long-term interest of Myanmar? I don't know. But in terms of solving, a problem, they've already done that in China. They've completely disintermediated and disaggregated the Chinese banks, the Chinese state-owned banks, in terms of payments. Everybody's using their WePay or whatever it is to transact. Alibaba, we can go through the list. And there was no reason why that wouldn't happen here. The only thing standing between them and, well, I guess me, is the regulator, right? So yes, they are absolutely a threat. Many banks are trying to pivot to become more tech savvy. The problem is culture. It's not tech, it's culture. The reason banks can't pivot to tech is their own culture is built on a philosophy that doesn't lend itself to innovation. Right? And once that culture changes and you start to see more young people and people that really look at outcomes rather than their own interests, I think you'll start to see a lot of change. I think your second question was cost of capital. Absolutely. Look, it's all relative in truth. I'm sure you've all been following that Mugabe is finally gone in Zimbabwe. It's just a wonderful thing. But he really reflected, how far you can take the cost of, I think somebody was showing me at one point 100 trillion, I don't even know what the currency is, but there was 100 trillion note printed in Zim, right? So, sorry? There we are, thank you. Yeah. Zim dollars, right? So, the cost of capital, you have to look at the cost of capital versus inflation versus the rate of growth. Because the optics of the 13% in this country is what hurts. In truth, they look overseas and they say the US, you're borrowing at 1-2%. But the cross currency, meaning $1 is not a chat, we all know that, right? So you have to pay more, right, as a rate of interest. So to lower the cost of capital, you need more competition. You need to have more deposits and you need to have more borrowers, right? So then banks are competing for borrowers. So you can walk into Yoma, KBZ and say, look, I've got a great business, I've got cash flow, I don't have collateral, but I've got a great business, I've been operating for 10 years, right? And I want to borrow at X, and these other guys gave me Y. Right now, they're only a few hundred, if a few thousand, they can compete on those terms because they're the ones with collateral. But if all 55 million Burmese went in and said, look, it would lower the cost of capital for most Myanmar. It would raise the cost of capital for those that are borrowing today from me, right? Their cost of funds would go up, but the cost of funds for the whole country would come down. It would drop from whatever rate it is now, 50-60%, to probably somewhere in the 30s to 40s, right? That's for the greater group. But for those that are accessing credit through banks today, yes, it would go up.
Hi, my name is Suga. I think I have financial services background. My question is two parts, or two different questions. First one regarding the upcoming new regulations going to be enacted, particularly with regard to the, I guess, clamping down or proper regulation of the overdraft facilities. What impact do you think that's going to have on the banking system? What's Yoma doing? Perhaps you can probably about time. Second, what do you think the impact of allowing foreign lenders, foreign banks to penetrate the retail market is going to be? Is it going to be business as usual? Do you need to improve things?
You absolutely do have a financial background, given the nature of those questions. Let me take the second one first. Similar to my comment on Ant or Alibaba, it would hurt the domestic banks, right? Because foreign banks tend to be a lot better, right? They have more systems. They, in fact, are truthfully more competent than most banks. Why I think it would not have such a great impact is, in truth, those foreign banks don't have the understanding nor the risk appetite to really drill down into the market. What you've seen, the 13 foreign banks that have come into the country have provided a lot of, I think, depending on the bank, but quite a lot of stiff competition for the large local corporate market business, right? Particularly the Singaporean banks. They've gone quite hard after, I would say, the high end of the market, which makes sense, right? They can deploy north of $1 million, sometimes much more than that, in lending to those. So they've done that successfully. In terms of the retail space, lending to people like us, in truth, there will be one or two that might make the decision to go retail. But that's a very, very big decision. Equally, their home regulator might have something to say about that. And they often have to reserve capital, depending on risk. And Myanmar still is in a place which would be seen as much more higher risk than their home market. So there would be a lot of calculus that would go into how much balance sheet they would be prepared to deploy in Myanmar. So the long and the short of it is, I think between their sort of knowledge and equally their risk appetite, I actually don't really see that as a very big threat. And in truth, some of the things we talked about tonight around the deficiencies of Myanmar banks are true of global banks as well. Right? I mean, they're not the most innovative you've seen, with some exceptions, and they're trying to innovate, but they're also not there. The 4 regs, yeah, great question. So it's interesting. It really is fascinating, the regs. So the regs are sort of cut and paste from the fund. So the IMF dropped those regulations. You can tell by the way they're drafted and how they've been deployed. I think their impact on the market perhaps hasn't been as well considered as it should have been when they were released. And I think you've seen a lot of, shall we say, spinning since they've been released. In the implementation period, the banks have been given to comply. Initially, it was sort of a 6-month period. Recently, and tells you about the nature of communication, I read a Reuters article, I didn't know myself, it's public, right? That banks were going to be given more time to comply, right? I don't know if that's true. I guess we'll find out at some point, right? So each regulation has a different impact. I think they're all very worthwhile. They are the right thing, in truth. They really are. It puts the financial system in a direction which is correct. They need to be enforced. They need to be enforced uniformly, but the banks need to be able to, they need to be given time to comply. Now you talked about overdraft. Absolutely. I mean, overdraft is a curse in many ways, right? Not for the borrower, it's magic for the borrower, right? But for the lender and for the financial system, it has not been optimal. So for those of you that don't know, the common practice in the local market is to lend effectively interest-only loans based on collateral. And it's funny why that became necessary. They didn't have enough borrowers. Seriously. It sounds a bit crazy, but there are only so many people with collateral. They literally ran out of collateral. So what do? You give them an overdraft. Why? Because if you've got a amortizing loan, they might go to another bank. So you just say, great, I got your collateral, keep the money, right? And just pay me interest. Because there's only a finite amount of collateral. So the reason for doing it sort of makes sense, right? Again, with the central bank printing trillions of cash, which all end up as deposits, you have to lend it, but there are only so many eligible borrowers, right? And so those eligible borrowers sit there with money just cascading over them, right? Because they've got collateral and the collateral values go up, and then they take that money and they invest it in more collateral and then they borrow more money, right? And this whole thing becomes circular. But it's a curse because, again, it doesn't solve the problem of the country, which is not providing more capital to the top 10,000 families in the country, right? It's about providing capital to the people, right? Or funding to the people. So it's going to take some time to unwind. Businesses in this country have been rather spoiled. Those that can access overdraft at 13%, that overdraft is effectively equity. Not to get too kind of detailed, but it's equity at 13%, which is pretty cheap because you never need to pay it back. And if something goes wrong, the bank takes the collateral, right? This is cheap equity funding. That's what an overdraft really is at 13%, because you never need to pay back the principal. So I think it is going to take banks time to unwind. I think as long as the central bank gives them time to do that, I think it will turn out well.
So you don't think there's a crisis that might happen? We need to happen.
It's funny. I don't know. I've been here for 5 years, and prior to this, I spent some time in Africa, and there are crises everywhere, right? In truth, and there's a potential for crises a lot. So you can't rule it out. At the same time, again, in my mind, although the numbers look large for the financial system, if you combine all the private banks, I think Myanmar's true GDP is probably twice what is published. So the World Bank numbers are like 68, 70 billion. I think the true GDP is probably close to 120, which means that the combined formal financial system is less than 20% of the whole GDP. So the credit markets are small as compared to the country, which again is because banks are not that relevant as a unit to the whole country. So my own view is that it's sort of a storm in a teacup, primarily because banks, you've got to solve all these problems to get the banks relevant. Thank God they didn't become relevant before we can clean up the mess. So I actually think the banks combined are still relatively small, 15 to 20 billion on the back of 120 billion GDP. I think it'll all work itself out. That's my view.
You said that changing the system or reforming the system in Myanmar, principle should be easy. Now, on the other hand, you said also that it's linked to mentality. So the question is, what do you think needs to be done to change the mentalities, and how long will it take?
Well, you know what they say. When you can't change the people, change the people. So I think that will be a real, acceleration of the process. You got to get the right people, right, with the right mindset to do that, which, as you say, is easier said than done. But if you look at the regulatory environment, it's no secret. You've seen 2 new deputy governors in the last, 6 months. You'll see a new governor next year, right? And I think that is an opportunity for change. It remains to be seen what happens, but I think that is very much it could be a catalyst. And then on the back of that, I think there needs to be, in fairness, I think there's an accountability on the part of the multilaterals and the bilaterals as much as on the central bank. And I think there needs to be less fear and more focus on financial inclusion and less fear about, to your point about the end of the world, right? I mean, ultimately, we have to have a more relevant financial system, and the central bank needs to be given the right advice. Rather than, this never-ending deluge of all the inadequacies of the market, we need to find a way forward. So I do think it is about people, right? So you got to get the right people there. And then, but I think once the right regulation is put in place, I think as a function of technology, I think you'll see very, very rapid change. So I'm quite optimistic that after perhaps a bit of fumbling around about getting the right ideas in place, you could see this happen sooner rather than later.
Just on a more practical side, you mentioned that for loans, basically with collateral this works. So do banks like Yoma or other banks finance, for example, cars and this kind of
Do we finance which, sorry?
to buy cars?
Cars, we do, yeah. We try to stay away from cars in truth. I'd rather do a tractor than a car, because it's productive. I mean, unless you want to drive your tractor around Yangon, but for me, I'm much more enthusiastic about productive assets, so I'd rather do a truck, where you're going to, rather than finding somebody's Toyota. But in theory,
in general.
Sorry, in general, absolutely, yeah. We have a hire purchase program. It's tricky because, as you know, this country, the import licenses tend to have a big impact on the value of a car, and we see less volatility in more commercial markets, but absolutely, yeah.
Yes, my question is like in some ethnic areas, like when the ethnic groups control, they use another currency like Chinese currencies or baht or like at the time, like when we trade each other in this area, and if our peace process show as positive sign, when we got a federalism, how can we manage our financial system as a central government, or how can we control? Because there are, like in Shan State, when I do for the research, like I saw that some price values, the value price of market are depend on Chinese market and Chinese currency, and like especially in Lashu, I found that. That's why even we build a bank in this area, and if Myanmar currency it doesn't work, how should we trade? And in this area we can also. I also heard that there has also black market, like they build a bribe to the authority, and like how can we manage this kind of system in these borderline areas and ethnic area to use one common currency as a Myanmar, like as a nation? Right? Can you have any suggestion on how the banking system can work in this area? I would like to know.
The short answer is it's an extreme environment of what is being experienced in Yangon. The disinterest, or the lack of confidence that you see in the currency in other parts of the country is simply amplified in those conflict areas, right? Where people have even less confidence and even less interest in supporting the central government. I think the root of the issue remains the same. You need to have confidence in the political core, in the center. You need to have trust that those people are working for you, right? And that you then want to support them and support their currency. You know, it's funny, in Canada we've had our own separatist elements in Quebec, where I spent years studying, right? And they simply didn't feel like they were part of Canada, despite the efforts of the central government. You know, everybody learns French and English, and many, many other countries have similar issues to Myanmar, right? It's not a unique issue. I mean, I know it may feel that way sometimes, but ultimately this is something that's been experienced around the world in terms of the conflicts and the various issues. Similarly with the currency, you know, a lot of these things, I appreciate being invited here tonight, but in truth, you know, a lot of these ideas you can read in textbooks. And these concepts are not particularly, you know, the challenge is not unique. You need to, you know, the way free markets work is quite well understood now, right? The right thing to do and the wrong thing to do, and the market is not that complex. So I would argue, in order to get a strong currency that people want, print less of it, right? Increase the interest rates, right? So then you get value. You know, when you have your chat, if you're only earning 8%, you're like, yeah, whatever. I mean, have it. If you were earning 30%, trust me, you would look for your money. Where's that loose change? Where's that 50 chat note that I stuck in my jeans pocket, right? It's all very logical. It doesn't have any value because you can't do much with it. At 8%, you know that it's lost that value. These are things that you all feel every day, right? You behave that way, and I think you just need to reverse that trend. Higher rates, print less of it, right? And then the rest is politics. But as far as currency goes, those are some simple solutions.
I'm really sorry, but this will be the last question because of the time limitation.
Thank you. First, one thing you mentioned that I was kind of curious about was remittance. Maybe you want to touch on that too, but I was curious what you said about sort of being afraid or having some hesitation about these fintech companies that are coming on. And noteworthy that Yoma Bank is affiliated with the Wave Money, which is a digital currency, and there are also two others and a third digital wallet that's coming on quite soon as well. So I wanted to ask the question about, not about remittance, but about the position of the bank in terms of digital currency. So now we have over 1,200 cryptocurrencies or alternate types of digital currency, and I wonder what would be your position in terms of supporting something like that, whether it would be interbank, you mentioned that already, which has happened in Canada already for about 30 years, interbank payments. Sorry.
Sorry, it's not, we didn't do this on purpose.
So just as a background to your last answer of getting a strong currency, now there's a lot of different options for currency. How do we face that? Is Wave Money part of that sort of new currency solution?
You know, it's interesting. Remittances are a result of a lot of these problems. You know, it's interesting. When you look at these issues, you have to cure the disease, not the symptom. And I would argue that remittances are a symptom of the disease. And really what they are is that people don't want to leave their money in a bank. So what do? Well, you just go and you put it in one end and you take it out the other. And you leave it under your mattress, right? And you do something else with it. You don't use the bank. It's because there are no payment solutions, to your point, right? The money, until recently, the money in your bank account was effectively held hostage. You couldn't get it out, right? The banking hour is 9 to 3. 9 to 3. That means you can either have a job or a bank account. You can't have both. How are you going to get to the bank? It's closed all the time. So you put the money in, you can never get it out. Perfect for bankers, right? But it doesn't work very well for people. So I think remittances are born out of that. There was a lack of confidence and trust in banks, and people use it, and also there's no value. You have the money in a bank account. Now with the MPU card and others, you can start to pay directly from your account, so there is some logic. But historically, I would argue that there's a lot of reasons why remittances were so, and continue to be so prevalent in the country. Wave, as you say, is a first step in looking to solve this. One of the interesting features about Wave, who here has tried using Wave? Anyone? Yeah, great. Yeah. Anyone else? Yeah, see? So it's quite interesting. A lot of people don't really know about it. Wave, you know, it's funny. You know, Wave charges 4 times more than what banks charge? 4 times. You know, it's also quite interesting. It's growing at 40% a month. Right? Trust me, do a little compound growth when you get home on anything at 40% a month. It gets very large, very fast. Right? So what's that read through? It means that the cost is not the issue. Everybody keeps saying again, like the cost of credit. It's not the problem. The problem is that people want to be able to do remittances at 8 o'clock on a Thursday night. when the bank is closed, right? And they don't need to drive 5 miles to find a bank branch in the middle of the day, right? The system isn't set up. So what we find at Wave is that Wave is solving a problem, right? And people are willing to pay for it. So yeah, Wave is primarily an OTC business, an over-the-counter business. It continues to be, here's money, here's a code, okay, it comes out the other end, right? What's interesting is the platform that it's building is very powerful because the network is a quantum larger than the banking network. If you add up my branches, KBZ's, AA's, and everyone else, I would say ballpark 2,000 branches. I may be wrong, but it's probably roughly right. Wave just cracked 15,000 agents. Now, yeah, they're mom and pops, and you can't do, it's a limited functionality, but as a touch point for money, it becomes very powerful, right? And it's this network effect that we've seen in other industries, and real, as you talk about tech, that we think is very important, and then we can layer other solutions across it, right? Once you've got the network, you can layer a lot of others across it. And I think, the day that Myanmar banks stop building bank branches is the day that I'm going to get nervous. But that seems to be a long way away. Right? They continue to invest in bank branches. And until those bank branches stop being built, that's, in my mind, when tech and fintech is being taken seriously. Because that means they're deploying their budgets in other ways, instead of ad campaigns that say tech, right? Rather than actually pulling back from very expensive branches and investing that in, data lakes and their stack and, payment solutions. I'm not sure if I've answered your question. I don't think Myanmar's ready for ICOs yet. I don't think it's ready for cryptocurrency. I think that might blow up some heads, just explode their minds in terms of where you're going. But I think it is a risk. And in truth, if you look at Cambodia, where the dollarization has really come into play, right? Where most transactions in Cambodia happen in USD, right? I think that's probably a more immediate risk if they don't manage to, keep the currency relevant by making it more usable. People, if you're buying something large in this country, you'll probably want to use a $100 bill. Why? Because it's just easier, right? Money is just a medium of exchange. If you don't allow people to do that conveniently, they'll just find another medium. Be it jade, be it rubies, be it $100 bills, they'll just find something else. So there is a kind of a market dynamic that I think will impact the chat. And I would argue that probably not less cryptocurrencies and more, other real-time solutions. That was our last question, right?
Thank you. Thank you very much. Thank you very much, Mr. Hal Bosher, and the audience.